All right, guys, let's have a look at Nvidia. So today, it's Friday, market closed, Saturday. I hope you guys are all having a good weekend. It's still sitting at its near all-time highs, hasn't pulled back much. It's only down like 4.5% from its highs. And they have earnings coming up. Pretty big event. Everybody's anticipating their events. And in the meantime, overall market, like we hit pretty big levels, all-time highs, 6,000 for S&P. Nasdaq made a new highs, and S&P pulled back 2.5%. But if you take a look at like overall heat map of the stocks in general and dive into the indices, the sectors individually, it's kind of like a misleading to look at. And again, it has been for quite some time, right? That there are many names are getting hit pretty hard, while indices being held up by large cap names. This is semiconductors 1 month performance. If you take a look at it, Nvidia is positive, Texas Instruments flat, Intel, it's year to date pretty deep down, but 8%. But everything else is negative. So it's the only semiconductor stock that is sitting near its all-time highs. And they're about to report earnings. And my bias going forward, I can disclose it right away. I don't have a position. I'm not trading it. But my bias is that if it takes out all-time highs and pushes higher, those beaten down, look at AMD. There are many names that are struggling actually. They're not year to date. The stock is down actually. Qualcomm, Broadcom, even though Broadcom year to date is down pretty big, look, it's trading below its 50-day moving average. And I was going through the sectors individually, and you can see there's 6% of Nasdaq 100 above its 5%, 5-day moving average, and only 28% of S&P 500 stocks are trading above their 5-day moving average. So which means 70% of S&P 500 is below their 5-day moving average. That makes sense. S&P pulled back. But my take on Nvidia is that this is pretty big cash cow. I have talked about it many times. Option expiration to option expiration. All it does is just people sell the heck out of options. And I have never seen such stock that has been number one most actively traded option stock day by day, every single day. This is just insane. Last 2 years, crazy. You can pull up, if you have a chance, if you have a software to look up like what stock has traded most active every single day of the market, every single trading session, it will be Nvidia 99% of the time. So that is insane. I haven't seen anything like this, but it has been a cash cow for premium sellers. If you are one of them, yes. If you are selling calls and puts, you guys are the ones who milk this name. And of course, people who are holding shares, anybody who bought it at any point is positive, right? Except for these last like 5-6 trading sessions. Anybody who bought this stock anytime this year and is holding it right now, they're positive or even breaking even, except again these people right here. So what if this name pulls back, let's say all the way to 50-day 200-day moving average, which would be like 20% correction? Overall market would pull back crazy too, like 10% correction. Is it going to happen? I don't know, but all I know is that internally, overall market, this is what we have. It's weak. It's being held up by big market caps. Of course, financials did very well after the election. So, and also a lot of people comparing Nvidia to Intel moment of 1999. If you go take a look at Intel's chart back in the day, it's so sad, man. Nvidia is getting added. It's not sad that but Nvidia is getting added. It's sad that Intel is doing this. and it hasn't done anything after this 2000, and it hasn't gone even above its 2000 in 1999 and 2000. Look, it had 75. It has never touched that level again. The highest we have gone is last 2 years or so, 70. That's it. So a lot of people are comparing it to this moment where Intel gets added in November of 1999, I believe, to Dow Jones Industrial after going up crazy in like 5 years or so. And then a lot of people comparing it to this moment. And then after getting added to Dow Jones Industrial, it goes on to move another like almost, I want to say 100%. Okay, let's go from its highs right here, maybe like 90% or so. And then all you guys know is 2000 crush, but this stock has never recovered those highs. Is Nvidia looking like the same? Because at some point, that there's a it's not a rumor, but it's at some point it will stop beating every quarter, right? At some point, couple quarters will be flat, or it will be within what market expected. Because what are they doing right now? They're reporting earnings, higher guidance coming, beating it by a large margin. I mean, you can do it only for so long. Again, as a disclosure, I'm not trading this. I don't have a position. I'm not biased, okay? This is just purely my opinion. But last time they reported earnings, we already saw it, right? It did chop around going into earnings, and it was doing identical price action. Look at this price action. And comes earnings out, and it just goes down, kills a lot of premium, comes right back. But it doesn't go higher. But my bias is, okay, resistance 150-ish, 149. If it takes out, runs higher, I think it will be profit-taking moment. If it goes lower, again, into that liquidity, it will be profit-taking. And I think it can come down, at least test its 50-day moving average. But going into next week, I mean, it's already implying pretty big move. IV is insane, 109%. It is implying $16 move, up or down, which means this stock can go to 138 or 136, or it can go to 158. So that's how much it's implying for next week. Option market is implying. What is the probability of that happening? Of the stock moving to, let's say, 140 or 138? 40% probability either side. Going down, 40% probability probability of this stock going up lower. Look at these premiums. If you understand options, look at this. So which means market could be positioned a little bit to the downside, or it could be there's more demand to buy puts. Stock is trading at 142, right? That's where it closed on Friday. Look at this contract. $140 put for November. Let's go a little bit further. $10 move, let's say. 142. Is there 132? I want to see exact $10 move premium to the put side and to the call side. So it is trading at $3, okay? 152, it's trading at $3, 325. Similar actually, but I feel like the puts are slightly priced, maybe more expensive than the calls. 140, 145. Yep, slightly. There's puts are being slightly more expensive, because at a glance I can see that, okay, it doesn't sound like the market is neutral here. It sounds like slight a bit. It's not like significant, but if you just go through yourself, probability of going down, going up, calls and puts, if you just compare the premium pricing. Slightly puts are expensive. It could be that people are buying more puts. Not sure, but this is usually the case. If puts are expensive, that means people think, I mean, it's obvious, right? People think that the risk is to the downside on this earnings report. That's why premiums could be expensive, because people could be hedging. And calls, you can see, I mean, I just showed you the put to call ratio, but I didn't say 3.1 million calls traded, 2 million puts traded. So the fact that calls traded more, it means it could be that a lot of people betting that it's going to go up, or also it could be a lot of people who sold premium. Okay. And you can go through yourself when people trade a lot of low delta options. You can see from this 3 million, look at 1.1 million. It's contracts that are from with delta of 0 to 20, which means it's low probability, far outside of the money contracts. These were sold, I believe. That's the usually case. And look at the puts as well. 49% of this 2 million, same thing. Delta between 0 to 20, which means those puts were sold as well. So market is pricing $16 in terms of percentages. Again, $16 would be, let me just be precise, okay? $16 would be for the next week. 100 and actually I was off a little bit when I said 138. So $16, which means it's implying that it can come down to $126, or it can go up to $158. So that's why I think anybody that is buying in the money puts, it could be just hedging. Anybody who's trading outside of the money on both sides, it's purely just premium selling. But my bias, again, I think no matter what they report, no matter what the price action you're going to see, I think it will come down. If it pops, I will be short biased. Again, this is just my bias. If it pops, I'll be short biased. If it drops, I'll be short biased. Because internally, market is screaming that we can't go lower, actually. Because options, pretty big OPEX is out of the way. And there will be volatility. VIX is pretty low, so but Friday you can see, I mean, we saw a significant spike actually, all the way to 17, 16 levels. Can it go higher? Possible. Can it go to 20 plus and we see overall market pull back a little bit more? Absolutely, because indices 2%, 2.5% off the highs. I mean, it's nothing. So again, that's the video for Nvidia. That's what I'm watching. Let's see what happens after earnings report. Thanks for watching. I will see you guys in the next one. Take care. Peace.